So welcome to another episode of Applying the Protocol in Practice. And again, we start out as always with the first step of the protocol. And the first step is, as always, to determine the trading conditions, right? So in this case, we will start out first of all with the time-based trading conditions, and therefore we will take again a look at the economic calendar, right? And as we can see, this week we have quite a lot of high impact news events on the Euro and the USD. So therefore, if we consider that we want to possibly have a reversal or an expansion finally out of this range, right? We have been anticipating a swing higher low to be formed at that level, and now we want to see prices expanding to the upside, right? And as you can see, we have no news on Monday, so we won't trade on Monday. Again, we only trade on Mondays on NFP weeks, and if we have a low resistance liquidity run according to the daily order flow, right? So as none of this is applying for this week, we won't be taking trades during Monday, as the consolidation or retracement profile is the most likely to occur, right? Then on Tuesday, we can see we have CPI, right? And therefore, we don't want to trade ahead of CPI. We might want to take a trade once CPI is being released, or we also might get into a swing trade ahead of CPI if we find a high probability, higher time frame trade setup, right? Then on Wednesday, we have FOMC meeting. So on this day, we ideally want to focus on the London session, and then we want to be done by the New York Open with our trading, or we want to at least reduce our risk as a consolidation profile, or the price action in general cannot always be the cleanest, right? So therefore we want to focus on London, and then maybe using London or the end of London to position ourselves for a swing trade for the FOMC meeting later on that day, right? Then on Thursday, the next day again, we have lots of high impact news. We have 3 high impact news during the New York session. Therefore, we know, okay, we have more than 3 news. One of our rules is if we have more than 3 or more high impact news in the same session, we don't want to trade between those. We want to wait at least until the last of the news has been released, right? So in this case, we don't really want to trade in the lower time frames. Again, we wait for the last one to be released, or we only stay on the higher time frames to not get chopped up on the lower time frames between those different high impact news events, right? And then again on Friday, we again have news on USD at 10 a.m. New York time, and as well at 2 p.m. New York time. So therefore, we again would focus probably on London session and then probably London close session. But depending on how we have been trading on the days before, we obviously have to re-evaluate our plans, right? As we always have to adapt what the price action is doing. Therefore, that's why we also have the time-based conditions and the price-based conditions, and we always have to align both of them, right? Price and time always have to be in alignment. So back to the charts right now, and last week, if you remember, we have been talking about our weekly close and the daily close. We got above this volume imbalance, and how we have then created the mitigation block right here, where we now want to look for longs in this small daily fair value gap right here, and how we also want to see price keep trading or to stay in the upper half of this mitigation block right here. I will quickly clear the chart a bit up, right? As you can see, we have quite a lot of drawings here, so I will clean up the charts and then we will continue with this lesson. So now that the chart is a bit more clean, we can now focus on the upcoming week, and again we have determined the time-based trading conditions, and now we also can take a look at the price-based trading conditions, right? We had an accumulation here, we had now an expansion out of this range, where we had the first signs of a change in order flow as soon as we closed above the bodies of this last up-closed candle in this bearish order flow, right? And we've also combined that with this higher time frame level, also the volume imbalance here. Let me actually mark this one out again. So we got the volume imbalance here as well, and you can see we never failed to close below, right? We respected that level, and now we got a displacement, and now we go down to the H4, and we will look for more higher time frame levels, and we try to refine our data levels on the H4 here, right? So as we can see, we have here this old balanced price range, right, which is now aligning with this upper half of this mitigation block, right? And we also have a normal H4 fair value gap right here, so we mark this one out as well. And as you can see, the 0.5 level of the H4 balanced price range, as well as the 0.5 level of the normal H4 fair value gap, are aligning here perfectly, right? And if we take the premium discount tool again, so we take the swing low, so where we basically all of this entire up move was starting, right? We can see that this level is also right below the discount, right? This line is the premium discount separation, right? And everything below this line is discount, right? So yeah, let's mark out the equilibrium of this level here, and then I will hide this again, so we can, let me hide this as well, so we will clean our charts up a bit more, right? So yeah, we will now go to the H1, and we now will wait for Monday this candle to close, right? We have those clean highs here as well. And now we want to wait how the week is opening and what Monday's price action is going to do, right? So we can see on Monday, Asia session is trading right into our level here, which we have anticipated, and we also get a reaction out of the level here, and we take out the buy side here, right? If we take a look, if we could have framed the setup here, you can see that we have Asia trading into the level here, so we have London being a continuation. Asia has been taking out the external liquidity here, the Friday lows, and then we had here the London open retracement, and we also had a potential lower time frame PD area here to enter, right? This M15 fair value gap here. But again, we don't like to trade Mondays. Just because today's Monday price action was kinda clean doesn't mean we will trade all Mondays, right? We have our rules and we have to stick to our rules, right? Although we are trading discretionary, we still have to stick to certain rules, right? We can't just trade setups just because they look good, right? So we will now wait for the Monday daily close. We'll go back to the H1, and as you can see, we are retracing basically this entire move here after we have been taking out the buy side here, right? We are about to close the Monday candle here, right? And basically we will now take a look at the Monday close, right? As you can see, we had a consolidation profile. We basically have opened up and closed at the same price level, and we've also taken out both the previous day's high and low, right? So we see we have been trading into that daily fair value gap as well as into the H4 fair value gap we've marked out here. And we also have been trading into this H4 balanced price range level, right, which we have been talking about, which is in alignment, right? So now we will go back to the daily chart, and assuming we have a bullish bias, right, we will now look for potential upside targets, right? And we first of all have a swing high here, so we have buy side liquidity resting above this high, which is also the high of this order block here, right? As soon as we close above the order block, we will want to use this as support to then look for longs and aim for the next buy side liquidity, which is this high here. And we also have a fair value gap resting right above, right? And I told you, or in the PDF you can read that swing highs resting close to imbalances are a high probability draw on liquidity, right? And if you now assume that this is the higher low, so we have a swing low here and a swing high here, we also take the fib from the high to low, and we can also see that this high and this daily fair value gap are the first PD arrays inside of the premium of this range. So if we aim from longs of the discount of this range to potential take profit areas, then this high and this fair value gap are our first objectives, right? And then we can then obviously later on look for those equal highs here as well, right? So we have Monday lows here, right? And let's take a look at the dollar index first. So we add DXY, and so if we take a look at how, if we compare the highs of DXY with the lows of the euro, right, we can see that DXY has actually taken out its swing high, right? So you can see we have taken out the swing high, but the euro failed to make a lower low here, right? So at this point we have an S&T divergence between euro and DXY, right? So therefore DXY has a strong high here, right? So DXY, if DXY is going lower, it does not really have to go above this high again, right? So therefore euro also not necessarily has to trade below Monday's low here to trade higher from this fair value gap. So I told you I don't want to trade, or I don't long above equal highs, but in this case we have a bullish order flow and we have S&T lows, so I don't consider those lows as equal lows, but as S&T lows with DXY, right? So price does not necessarily have to trade below those lows again here, right? So let's remove DXY again, and you'll now look for the Tuesday London session, right? And we said on Tuesday we only want to trade London session if a setup is given, because we will have CPI later today on that day. So we are now waiting for the London session of Tuesday to start, right? So let's also quickly mark out this daily fair value gap here. We have been trading below Friday lows. Actually forgot to mark that out. So there we go. We have the fair value gap here, and we can see that we have Friday lows here, and you can see that Wednesday high and Friday low created this daily fair value gap, right? And you can see we trade in fair value gap, trade slightly lower into this level here, into the discount of this range as well, and then got a reaction to the upside, And now we also know that Euro is, compared to DXY, just a really strong pair, because it fails to make a lower low, although DXY made a higher high. So this is also supporting our bullish idea of bullish Euro, right? But for now we are still ranging here, right? So there's nothing interesting for now. And again, we have Asia session, and then we have between Asia and London Open, we take out the buy side again here and get rejected here for now. And we have London Open right here. So if we are bullish, we want to buy below the 3-day open, which is in this case this level here, right? And ideally also below the Asian lows, right? So in this case, for now, it's not looking like we will get anytime soon below the New York Open or below the Asian lows. So probably again a low probability session. And there you go, you see we just have been trading higher a bit deeper into this bearish order block. And we also have news at during the New York session, so we will probably just skip this day without taking any trade. And there we can see CPI is pushing price higher, and then we get a retracement. But again, nothing which was according to the protocol, so therefore also no trade, right? So for now we have no trade taken this week so far, but patience is paying off in this game, so we have to stay patient. And sometimes there will be weeks where we will have multiple setups, sometimes there will be weeks where we only might have 1 or 2 setups, right? The frequency of high probability setups is not distributed equally, right? Sometimes you will have more, sometimes less. So again, we want to wait for daily close. There we go, we have daily close right here. And we now go to the daily, and we can see that we have now also closed above the mean threshold, or the 0.5 level of of this bearish order block, right? And we now also have equal highs here, right? And we've also closed above this up close candle here, right? So we've kind of made a higher high here, right? So we can argue that we are now here in a bullish order flow, right? We make higher lows, higher highs, higher lows, higher highs, right? And on Wednesday we have FOMC, right? So I told you we ideally want to get into a trade in London, and then depending on the price action we might want to hold it through NFP, right? If it's a swing trade idea. So again, we go to the H1 and we wait for London session of Wednesday to start, right? So now we have Asian session right here, and we again go onto a higher time frame, the H4, to find a higher time frame level here, right? And what do we have here? We have the S&T lows, we have those down close candles, right? So we have an order block right here. We marked this one out, and you can see this order block is also aligning with the inversion level, right? The weekly inverted volume imbalance, where we have no trade above. So now here it acted as resistance, and now we want to see this level acting as support here, right? So we have the bullish order block right here, and and we also have an H4 fair value gap right here as well, right? So we have again PD array alignment, and we also have this low right here, right? With our previous day's New York session lows here. Again, we have fair value gap, we have a time-based low. So again, we have combined time-based liquidity with price-based liquidity, right? So we have another confluence for price to trade below this low, and then looking for longs, right? Then again, if you take a look on the H1 here, we also have an H1 fair value gap here, and if you look closely, you can see that we have almost no wick on this up close candle here, so it's likely the price will also slightly trade into this fair value gap on the H1, which is also again aligning with the middle of this H4 fair value gap, right? So we will mark this one out as well. Use a dashed line here. So this is our H1 fair value gap, and now again we wait for the London session to start, right? So we have Asia consolidating, so now we want to, again, the playbook you immediately should think of is London open manipulation, AMD range manipulation, and then distribution to the upside, right? We have a short-term target here being the previous day's high, and we also have obviously this high here, and we also potentially have the swing high, the daily, and the fair value gap, right? Considering that we have FOMC tonight, we might see some increased volatility, right? So we now want to wait for London session to start, right? And there we go. We have now ahead of London session again a manipulation to the downside, right? And there we go. We have London open, and you can see we have traded right into this H1 fair value gap, right? And now to kind of confirm shift in order flow here, we have those up close candles here, right? So we mark those out. Those are a bearish order block. If we get to close above, this is turning into a bullish breaker, right? So we want to see now price ideally closing above, and we also have a balanced price range here, right? So if the balanced price range, which is a really strong PD array, if we also fail to close or to stay below this bearish balanced price range, and we also close above, we have confirmation of a shift in order flow, and I will look for longs here, right? So again, we have the protocol again. We have the step 2, the bias is bullish, right? We have a bullish daily bias. Then we have the higher time frame PD array or PUI. So again, we have lots of confluence here. We have the inverted volume imbalance. We have the H4 fair value gap. We have the H1 fair value gap. We have this short-term low, which we've taken out. So we also have a run of counterparty liquidity, right? And our narrative is we have an AMD here, right? We have a range here, and we now want to see the manipulation, and then we want to see here now the distribution to the upside, right? So this is our lower time frame narrative, right? And on the higher time frames, we have the narrative of a potential higher time frame market maker buy model here, right? So we have the sell side of the curve. We have a potential smart money reversal here within this entire range, and now we want to see the buy side forming here, right? And this would be our first TP, right? Because this is then the first premium array, and then we want to go from there and reevaluate if we will be able to trade into those equal highs and the monthly or weekly highs right here, right? So going back to the lower time frames, we want to see now price, and there we go. We have been closing above here, and we also have been closing above the bearish order block here, right? So at this point, I will now put a limit at the top of this breakup block here, and I will put my stops below here. So it's a 10.6 pip stop loss, so it should give enough room for price to breath here, allow for some wicks into this level, but we should not close back inside here. Ideally we now will trade back into here and then trade to the upside, right? So we enter here, and our first TP would be the previous day high, which would be then a 3.46 R trade setup. So I would take some partials here, and then also something here maybe, and then we can also leave some runners for the 1.09 levels, right, which is the daily swing high, and we also have the fair value gap here. So then we now will see and wait if we can get a fill here, right? So we get filled here, we have a little bit of drawdown right now, and we now want to see price expanding out of this breakup block here, right? And you can see how we perfectly use the equilibrium of this inverted balanced price range as well as this breakup block as support, and then trade to the upside, right? And now ideally we want to see the distribution phase of the AMD here to start out, right? And we can also see that we have now the 3 AM opening candle here, right? I told you if London is poised to make the lower high of the day, then the lower high should form around the 3 AM candle, 3 AM price, right? So there we go. We have been returning quite a few times back into this breakup block, so that's fine as long as we don't close below here, so you don't move your stops and put them to break even as soon as we trade away, because there's no reason as of now to move your stops to break even quite yet, right? So we now wait for the next H1 close to kind of update our mid time frame perspective, right? So we are on the H1 now, and you can see we also now got a close above this swing high, which led to the retracement into the discount. So we got a market structure break, and now we can also start to use our standard deviations, right? We use standard deviations of moves who have taken out liquidity, and then we broke structure to the upside or downside, right? In this case we broke structure to the upside, so we have taken liquidity on the sell side, and then we've broken above the swing high. So now we can use this range here, right? We have range low, range high, and now we want to use this range to project our standard deviations. And you can see that the 2 and 2.5 standard deviations are laying right above this daily swing high, and the 4 and 4.5 extension are also almost lining up with this level here, right? So we have a confluence of the standard deviations with the PD arrays, right? And again, remember we have FOMC later that day, so we don't want to trade the New York session here in this case. We're holding our trade, and at this point, if we take a look at the H1, we have a breaker here, so you could say, okay, I don't want to see price now trading Lotus breaker. And we also have an immediate rebalance here, right? So we have this candle closing price, and then we have the next candle expanding up, and then this candle is rebalancing right to this high here. So we have an immediate rebalance, and this is a really strong sign of a strong order flow, right? So in this case you could say now I will now move my stops to break even, so right below the H1 breakup block here, because I don't want to see now price trading back down here, right? And also we have FOMC later, so you also might want to manage your risk accordingly, right? So let's hide this daily order block right now. So again, quick summary, we have used this H4 balanced price range. We have the S&T lows, so we don't expect those lows to be rated again, right? Although we have the Monday range play, right? We say if we have a bullish week and we want to play the Monday range, then we want to buy below Monday's lows. But because we had quite an accumulation range here and we also have S&T lows here, in this case we don't expect price to go back down here because we have already accumulated, or institutions have already accumulated lots of longs positions right here, so it's not necessary for price to trade back below in this case, right? Because we're leaving this range here. So back to the M15. We will now go forward in time. So now we hit our first TP area, right, where we take something off, and now we move our stops. If you haven't already done so, we move our stops now to break even, right? And we now wait for FOMC, right? And maybe FOMC can push price higher, although we have been already extending quite a lot. So we can see we're at 30 pip London, 40 pip New York session, so we have already met the daily range. So you can see we're now also trading at a 2.5 standard deviation here. And now we want to see what FOMC is doing, right? And as you can see, we get a retracement during FOMC here. And we now basically again want to wait for the daily close, right, to reevaluate our daily buys for the next day. So we are still holding our partials from this long, stops at break even, right? And we've taken off something here in this area, and we're now holding some partials aiming for this high here, right? So we again have the daily close here, and you go back to the daily chart right now, and if we take a look, we have closed above the previous day's high, so this is a good indication. And we had retracement candle, consolidation candle, expansion candle, and we now might be getting one more expansion candle. I told you the maximum of expansion candles we want to trade in a row are 3 expansion candles in a row, right? So we have technically one more expansion candles, which we could expect here before we then probably will see another consolidation or retracement profile here. So we go back to the lower time frames. Let's go back to the H1, and we now want to wait again for the London session, right? So from my experience, the London session after we have FOMC news late in the day usually tends to be sometimes a consolidation profile, so therefore we want to maybe keep our expectations low for the London session, right? And we want to wait until all of the news events which we have during New York have been released, right? Or we just stick to the higher time frames and don't get involved in the lower time frame chop, right? So we have now London trading below the Asian lows. And we have this low here, which is the FOMC low, right? And now we also have been taking out the Asia lows, and we also taking out the pre-London lows, right, which have taken out the Asian lows. And that's why you also don't want to long here at London Open, because those lows are not, although we have a breakout structure here, you don't have a narrative here, you don't have a higher time frame level. We have a low here still, right? And we have a value gap right here, which price is trading into. And we also have this balanced price range here, right? And you can see we trade right into the equilibrium of this balanced price range and then sell off and take out low again. So don't do the mistake of longing here just because we have taken out Asia lows and we have a break in structure and displacement, right? Always think about the bigger picture, right? So now potentially again we take a look at DXY to maybe if we have another SMT here. So remember, SMT is only confirmed if we have also a shift in order flow. Only, so if you look here now, you can see that there we go. You can see that DXY made a higher high here, right? So these are taking out this high, and Euro failed to take out the lows here, right? So we have SMT here. At this point, so if we remove this here quickly again, at this point here, you don't want to say a long here because we have SMT. You can't do that, right? So in hindsight, obviously it would have played out here, right? But an SMT is only confirmed once we then also see a shift in order flow, and at this point it can simply be lagging price action, right? So for example, Euro can take out the lows a little bit later than DXY making a new high, so therefore we just want to wait until we get a shift in order flow. So in this case you want to see price closing above those down close candles here, right, to then confirm a shift in order flow, and then we can take the SMT into consideration going forward in that day here, right? So there we go, we now got the close above, so we have now a shift in order flow, and now we can consider this as an SMT, and we can say, okay, we don't have to take out those equal lows here. So again, we have 3 news events during New York, so we have now two possibilities. We will either stick to a higher time frame entry here, so to maybe M15 or H1 entry, or we will look for a lower time frame entry on the M5 or lower after the news or the last news of those 3 has been released, right? So we have London session closing here. If you go on the H1, we can see that we have this sell side fair value gap here. So we have a fair value gap which we closed above, so we have an inversion level here, right? And we also have an order block right here, which is this down close candle here, right? Because we have taken liquidity, we have broken structure, we have SMT, so this is a high probability order block here, and we also have a fair value gap resting right above, right? So we don't have to trade all the way down, we can already technically expand from this inversion level, but we also might trade down here because we have an unmitigated fair value gap and we have an unmitigated order block here as well, so we keep that in mind, right? And we are about to close the London session here, and we are now about to open the New York session, right? And there we go, we have now New York open, and we are bullish, right? So we want to see New York being a continuation, and we have the open now here, right? So we have taken out those sell side liquidities, those short-term lows, and trade into this H1 fair value gap, and we are now also trading at the bullish order block here, and we also have an M15 fair value gap inside of the H1 order block here, right? So we have again PD array alignment. So at this point we could take a long here, right, on the higher time frames, right? We have the H1, we have this order block, so we could say, okay, we will long here, put our stops below the strong low, right? We said we only put our stops below strong lows, which is this one, because we have taken the Asia lows, right, and then broke the structure to the upside. So we can long here, we have a 15 pip stop almost, and we could then aim again for the previous day's high for first TP, which would be a free R trade, and we could then also leave some runners for this high here, right? And again, we can use the standard deviations of the swing low, which has taken liquidity, to the swing high, which has broken structure, and we can see that it's aligning with those highs here, right, which would be the first TP, the previous day's high, right? You can see second standard deviation is aligning with this swing high here. So we long here, right, at the top of the order block. We would have gotten the full here now, and now we have lots of news, and by only sticking to the higher time frames and not looking at the M5 or lower, we simply avoid getting chopped up in those conditions here, right? And there we go. We would have now hit our first TP. You can see we trade perfectly into the mean threshold of this H1 order block. You can see perfect in the middle, and then we got the expansion to the upside now. And remember, we have still runners from here, right? We have still our stops at break even here. We could have now moved the stops of this position as well to this level here, right? So we have stops here as well now at this level, and we have now hit the P of the or some partials of this trade, and we still have the partials for those sides of this trade here. And you can see that the fourth standard deviation of this move here is aligning as well with the swing highs here, right? So we have the standard deviations aligning perfectly with our take profit areas, which is a nice confluence, right? So we have no first day New York session. We still have, I think, one more news event, and you can see that this one push price down, and there we go. We now would have hit the TP of all of our remaining positions, right? So obviously, depending on how much you take off at each level for the partials, right? How much you have taken off here, how much you have taken off here, and how much you held of your total positions, right? But you can see we have here now two really good long setups, which could have given you about 10R, depending on, or at least 5R, but depending on how much you would have held, you could have gotten 10R in total. You can see this alone was an 11R trade. Of course, you take partials, so it's less in total, but just to give you an idea, right? And the setup as well, a 5.8R trade. So in total, this would be around about 17R, obviously depending how much partials you take. It would be at the end probably around 10R in total. So again, this week we had again two high probability setups. For Friday, we will most likely skip. Why? Because we had an expansion on the upside. We had a really one-sided week. We had only up-close candles. We had now 3 expansion candles to the upside, right? We have hit a higher time frame level. We have trade into the swing high. We have trade as well into the fair value gap. So we are overextended. So Friday is most likely going to be a consolidation or retracement profile, right? So we would be done with our trading for the week here. And you can see on Friday we have a really tight range, and then we get some retracement back into the range as well. And there we have the weekly close, right? So this was this week's breakdown of trades, right? We've also introduced a new component, which are the standard deviations, and you've also learned how to use SMT to know how equal lows are being drawn liquidity, or such in this case we had 2 equal lows, but as they are SMT lows and in the direction of order flow and not considered as equal lows, right? So how we will now will continue trading will be, as you can probably guess, the content of the next episode.